Welcome back. We're in conversation with Manish Chokhani, Director, Enam Holdings. Manish, let's get to India now, for our viewers, right? Let's break this down. According to you, what is price to perfection? Different lists. Let's just identify buckets.
Yeah, I mean, there are lots which...
But I know you have strong views about a few, so let's just start there.
It's not strong views. Like, I've said this before to you on certain shows, that even when at the peak of the IT boom, if you paid a very, very fancy price, you didn't make returns. So the businesses will do very well. So it includes all, for example, EMS is growing 40-50%, no doubt about it. But it's also going to suck in capital, and therefore they will keep diluting you. And if you're paying these, 100 multiples, 60, 70 multiples for them, from a return perspective, you got to be clear, like what is the time horizon on which you're in. Same way, like food delivery as a business is now a $50 billion market cap. So even if you look forward, how many $1 billion of profit do you see coming out of this whole pack over the next 5 or 10 years? So there's things like that.
Capital markets, I think.
Capital markets is, again, it's like a secular thing. It's a trend line which continues. But again, there are stocks I also own there, so I better be careful that if you're paying 35, 40 times, and even for the ancillaries are now priced at 35, 40 times, and there's fresh supply going to come from the ICICI and the SBIs of the world who presumably will list their AMC soon, maybe this broadens out and you don't make those kind of returns anymore from there. So look, as an investor, I'm doing what you call mergers and acquisitions. At what price would I buy this entire company? And you don't really typically make money by buying things very expensive.
Correct.
And you buy when there's pessimism. And pessimism may be in different pockets of the market.
Yeah.
So we talk about that.
There is pessimism in at least IT services, but this falls for you in a bucket, slow derating.
This
IT, pharma, FMCG.
IT, generic pharma. So this is old tech in a way.
Yeah.
And unless it transitions to new tech in a way, the value capture, for example, in pharma in the next 5-6 years with both biotech and AI coming in, is going to be new drug discoveries coming not from chemicals, but from maybe the biological side of stuff. Same thing in IT. We will do a Y2K for the next few years to create the data sets to make them AI enabled. But beyond that, the business models will really have to change substantially. Few companies will do it and they'll fall on the right side. But most of them, I suspect, won't. So that's also at 20, 25 type multiples. It's not pricing you the risk that you're running for. Like I gave you the example of old broadcasting companies, which slowly got derated down to 10x instead of where they used to trade in the past. So those would fall in that bucket. So what that leaves, for example, is I still think financials is the center of the boom in this period. Capital market guys are still very, very good. But when you do this whole consumption play, because I don't have exports, infrastructure, FDI and so on coming, we have no choice but to kickstart the economy with consumption. But that consumption has to lead to investment cycle coming back. And for that, the center of that will have to come back to, for example, there'll be companies like L&T at one end, and there'll be companies like SBI at the other end. That unless you see these two participating and performing, you don't really see a very big bull market continuation. So those, and then Finance Minister finally has come back to the magic word of privatization, where if the strategic sectors are left out of defense, aerospace and so on, there's no reason for the government to be holding on to, for example, its metal companies. Why are they in SAIL and NALCO and NMDC and so on and so forth? Why do they have so many PSU banks? Can they consolidate and bring a few of them together and so on? Now it's a neglected space, so there is some room to be made there. They may or may not be well created unless they go in the right hands. But I remember in the 2000s when privatization happened and you sat in, say, a Hindustan Zinc, it's like more than 100x for you. So there are opportunities in the market, but overall, it's a market which is very optimistic. Like I said, strategics are out, FDI investors are out, PE investors are out, a lot of Indian promoters have sold their stakes down. And the market's being held by price agnostic retail flows. And if a mood changes a bit over there, and I hope it doesn't, then we are in some, then you have to wait for the next cycle where you have similar optimism, which may be 3 years, 4 years later. So as long as you're holding with a business with a time horizon now of 4-5 years, and your return expectations are the normative 15% type for this market, you'll be okay. But if you're thinking that what we made over the last 4 years is going to continue, I think you'll be in for disappointment.
That's not going to happen. You kind of talk about one segment, which is right to win in that sense, right? Things like the space Indian.
You mean
Ayurveda?
yeah? So in the
Do we have
context of
options here?
Indians
The
going,
graphics will come up. Yeah.
so in the context of Indians going out
Yeah.
to win in the world,
Yeah.
you remember when the Japanese came, we said Japanese can miniaturize everything because they're so tight on space, so they make things smaller. They made small cars, they made small electronics, and so on. What is the kind of stuff which India intrinsically has a right to win, which the West will otherwise patent and take away? Like, for example, we're leaders in yoga,
Yeah.
but you have power yoga in the West. Now, it's not something you can take as a product to the world. But certainly things like Ayurveda, can it go out from India? Indian design and fashion, which will then hopefully become a lot more center
For
stage in the
listed
world.
equity investors, are there? You gotta,
People will make options. They will look very small today. But, for example, ethnic wear, which comes out of India, and there's a big ethnic population, then over time what happens is that catches on. Like how you go out, you like Chinese food and Japanese food, you like Indian food as well. Now, the Indian whole travel and tourism industry, the Indian hospitality industry has some unique advantages. So can some of this stuff become our ambassadors to the world? Because so far, when you go out, you see like what they say in Sri Lanka or Indonesia, they call it Baja for the Bajaj three-wheeler. So there are products which have gone out, but or there are some of these Marico, Dabur, Godrej type companies which have indeed gone out. But you have to see a lot more of these because the global market size is then the TAM for you. Whereas the Indian consumer set, after a while, it kind of withers away.
Yeah.
So
So you
people
gotta
say
have
in the US you can build tall and deep sequoia trees.
Yeah.
In India it becomes a banyan tree because you have to go into so many categories.
Yeah.
Like you see
So it does the
Nykaa as well,
same-
for
yeah,
example.
yeah. So just to wind down the conversation, last time you said we need a new wealth impulse, right? And that seems so true, that you kind of maxed out on a few things, right?
Yeah, I mean,
And-
look, the game for us for the next 10, 15 years, unless we build our own IP and tech and we have our own brands and we think a lot more about the world than only serving our market, we won't create the market caps. The big wealth creators of the past also, first you made it out privatization, that whoever took over what the government was doing, and you may still see that happening with Adani and Jio and so on and so forth. The second was about people who went out, like the Infosys and the Sun Pharmas and so on. If you're not in this kind of mix, you don't become a gigantic company. And real wealth creation is you buy something and you can sit on that trend for 10 years. You don't become that large. So today it seems to be the capital market space, but that's not big enough. Same way this organization of blue collar people, we're giving the market cap, but the profit pool, I'm not so convinced that it's going to be that large enough.
Last question, foreign investors have been big sellers, Manish. Do you see them coming back?
When they'll see growth, they come back. So when they come back in primary deals, they see good companies, they come back. Investors are, look, they're not political, they don't care about countries, they care about returns. If you see a return, even in China, the same Americans have gone to China. So I don't think it's
And how far out is growth coming?
growth is a function of valuation comparison, right? So if the problem is if you get 25% growth in US on 20 multiples and you're getting 20 multiples in India for 9% growth, why would you put money here? So that's the challenge.
One has to, either growth has to pick up or valuation.
Either valuation goes sideways and we get cheaper relatively, or
So broadly what I'm
EPS has
hearing
to
is
go up.
perhaps some more time correction may continue.
I hope. I'm a buyer always, so I hope for a time correction.
Right.
But usually markets don't give you that chance, so they will tend to then correct and throw you rolling opportunities in different sectors. Like it, for example, happened in textiles when the tariff thing happened, things got sold off. And if you can look beyond the hump and say, okay, it'll get solved in 6 months or a year, maybe an opportune time to have looked over there.
Manish, I have enough questions for another half hour, but we are
Next time, two shows.
2 shows back to back. Thank you very much, Manish, for dropping by.
Okay.
Really appreciate it. Thank you very
for having
much. Well, I think that is the word from Manish Chokhani with a perspective on markets. So basically, I mean, at least from an Indian perspective, some more time correction, valuations are to cool off, or earnings growth is to pick up, and that perhaps gets money back in, foreign money back in. Indian money remains very, very steady. Hopefully, that continues. Well, that's it on this program, but we'll take a quick commercial break. Programming continues on the other side.